Income tax in Australia is imposed by the federal government on the taxable income of individuals and corporations. Since World War II, state governments have not levied income taxes. Today, income tax law is governed primarily by two acts of Parliament: the Income Tax Assessment Act 1936 and the Income Tax Assessment Act 1997. The reason we have two acts is because the government began rewriting the original law to make it easier to understand, but the process wasn't fully completed. As a result, older provisions remain in the 1936 Act, while rewritten and newer sections appear in the 1997 Act. For individuals, income tax is the single largest source of government revenue in Australia. It accounts for nearly half of all federal tax receipts and remains stable and predictable. Australia's progressive tax system means higher income earners pay a higher proportion of their income in tax, while lower income earners benefit from generous tax-free thresholds. The law defines taxable income as assessable income minus deductions. Assessable income includes both ordinary income and statutory income. Ordinary income includes salaries, wages, rent, and interest, income according to ordinary concepts. Statutory income includes income made assessable by specific tax law provisions, like capital gains or certain government payments. There are two main methods to determine when income is derived, that is, when it becomes taxable. These are the cash basis and the accruals basis. Under the cash basis, income is counted when received. This is suitable for individuals and many small businesses. Under the accruals basis, income is counted when the right to receive it arises. This method is commonly used by larger businesses or those that carry stock. The income year in Australia runs from July 1st to June 30th. Taxpayers may apply to the Commissioner of Taxation to adopt a different financial year if needed. Income tax law also makes provisions for tax offsets, levies, and compulsory repayments like those for student loans. These are additional amounts that may increase or reduce the final tax payable, depending on the taxpayer's circumstances. In essence, Australia's income tax system is designed to be comprehensive, fair, and adaptable, serving as a backbone for government funding while encouraging compliance and economic contribution.